Hello, trading has closed on April 27th, 2023. As always, we'll start with our disclaimer. We'll go over our calls, and then we'll make some predictions. I didn't have any video yesterday. I was busy all day long, so I'm going to change the order of my presentation around just a little bit. Well, this is my trading plan for tomorrow, which is Friday, April 28th, 2023. Please remember I can be completely wrong, and any trade you make should be made at your own risk. Now, this week, viewers of the channel have been very fortunate to get a look at how David makes his analyses. He's given this stuff away free, and if you didn't see it, you don't know what you missed. And you have one more chance to see some of his proprietary indicators if you watch this video. He called a day-long rally very early this morning. It was obviously a very accurate, very profitable call. Don't miss watching this video. He tells you just how he did it. Don't take the risk of forgetting. Copy the link. Even if you stop watching this, go watch this video. This stuff is pure gold. Well, I'm going to come back over this pattern in just a minute, but let's switch the order around. I was busy all day yesterday. As I said, I wouldn't make a video every day this week. We had this big drop on Wednesday. MEJT did give a sell signal, but as it was dropping right from the beginning, it said there was an optional higher target. And this optional higher target, just people who watch my webinar know, was going to work about 95% of the time. Now, that's not as accurate as the rest of my system, but 95% isn't too bad, and it certainly worked today. We also had another buy signal from the system in the afternoon, and that certainly worked. Well, here's the daily chart. Here's Tom DeMark's TDST line, 41.4760. Here's the upper Bollinger Band, 41.75 and change. These are resistance areas. You can go through them, but if we have another rally, anything like today, you're going to run into resistance. That's the daily chart. And this is the weekly chart. His TDST line's at 41.66 and change. And this 89-week moving average, which is strong resistance, you see how we often stop right there? That's around 41.86. And I'm going to make the case that 41.86 is a strong candidate for the top of this move. Now, I'm going to actually change the order a little bit more. Well, let's start with this one. We're looking for an ABC. We've completed A. We've completed B. We think we're in wave gray C. And you want, if that's the right count, which of course we don't know, you want to have gray C and gray A have a Fibonacci relationship. And there is a Fibonacci relationship around 41.85. Which is this line. You also want black C and black A to have a Fibonacci relationship, and that's around 41.87. So those kind of center around the same 41.86 number we got from the 89-week moving average. Let's take a look at these waves here. Now, just a minute, let's do one more thing here. Now, earlier in the week, my last video was on Tuesday night. We said this was an important Gann fan line. We said if we went under it, without gapping under it, that the move wouldn't stick. And of course, we went under it and the move did not stick. We also said one of my trading rules was that when you have an upsloping trend line like this and you break it in a straight line, that you should return to the line at some point. Now, if we rally tomorrow, we'll hit the line around 41.74, but on Monday we hit the line around 41.84, which is close enough to 41.86 to have confluence of signals at that point. So we're coming up with the middle 41.80s every time. Let's stick with 41.86. Now I can count the down wave as complete. I mean, we have an A and a B and a C, and all these things work, even the subwaves work, but I can't count this wave as complete. So we're going to say we should be higher than this. But let's see how 41.86 works on a longer term picture. Well, right now, let's come back here just a second. 41.86 would be a bit higher than this high. That would be up here, which is higher than this. So if this was the high, if this is the high of B, you would get wave balance around 35.17. But if we trade it up to 41.86, you get a little bit higher, around 35.22. Well, if B ended at 41.86 and C ended at 35.22, and you took the average of this low, 34.91, and 35.22, you would come up with 35.07. And 35.07 is a point in the fraction away from having the average of the wave C lows be a perfect 1.618 times the height of wave A. So if that works, you've got magnificent balance of the waves on a grand, super grand scale. I mean, this thing goes back, I think this is 1990. You're talking 30 years. Now, just because that works, it doesn't mean other things won't. But there's a real good chance that we hit 41.86, and if we hit it Monday and drop from there, 35.22, if it prints, would be a wonderful target for a drop. Friday's pattern has the early low. We could still gap up. Typically, it's a rally day with a high in the final hour. If it's weak, more weakness should follow in days to come. I can't count the current rally as complete. The break of the upsloping trend line and the straight line drop calls for the retest of the line. Numbers around 41.74 Friday and 41.84 Monday. We're on a NASDAQ McClellan oscillator Bollinger Band reversal buy signal, which also argues for higher prices. However, the wave count and the low volatility index argue for any advance here to be limited before reversing, and probably strongly, because the wave count will be complete. The wave count I have has us in the last wave up. There's wave balance in the mid 41.80s cash, especially if that number is hit Monday. A reversal there would have wave balance around 35.22 and change, which would be a major low if it's a stop and reverse. Of course, just because that number works doesn't mean others won't. It's not the only possible path, but if it works, it would be wave balance for the ages. So we'll keep our fingers crossed. We think higher prices are coming, even if they don't come tomorrow, even though I think they will. Can't prove it. We get to cross this number off the list. We get to cross 4,097.07. It actually didn't print within its time frame, which was Wednesday, and things are a lot more fun when these numbers print within their time frame. But they did print. It was resistance. It was support. We also had support from the prior FOMC announcement price from December. It's amazing how the market remembers this number even 4 months later. And we think this isn't over, but it might be over pretty soon, and then the drop begins. So it's the pattern with the early low. Those are my targets. Don't forget to watch Rod Pavitt's presentation, and that's today's call.